I'm, as always, at the Frankfurt stock market, but also here, all eyes had been on New York, on the Fed decision of yesterday. Now we know more. So, welcome to the weekly update of the Werthstein Institute. Janet Yellen did what we forecasted very early, minimum one rate hike this year, and of course one in December latest. This was done, and she gave a forecast. She said so 3 more rate hikes she expects in 2017, and that means the interest rates will stay low anyway, not zero but low anyway, and that means that our forecast and our portfolio, what is mainly focused on equities, will be the right asset allocation also in 2017, because it's not really competition for equities next year if we have some yields of around 1.5% in the US. What we also know now is that in Europe the interest rates will stay stable for a longer time. Draghi said that last week, and the bond buying program is prolongated. And this will have influence on, of course, the trends at the forex markets. That means that the dollar is more attractive than the euro, and that can mean that the dollar rise further. Normally, the budget spending program of Trump is very positive for the US economy, but with this rising dollar, that's a kind of bracket. And on the other hand, in Europe, it lifts the export industry, especially in Germany. So the economy growth can be relatively equal between the both. And that means equities from Europe and the US are attractive, and so that will be our way in 2018 also, 17 also. And then we also bought some bonds, especially company bonds, and one Zeitgeist, the emerging market bonds, so bonds from these emerging countries. The interest rates of them gone up the last weeks, and so that's very interesting now to invest again in these kind of Zeitgeist, to have, beside the equities, which have risk of course, some stable income from the interest rate side, what we can fix in now for some years. That was the weekly update of the Werthstein Institute. After the Fed decision, I say goodbye until next week.